gold prices are a little more certain that have hit a record high on Tuesday, climbing globally above the $3,500 an ounce mark. Now, this surge comes as investors bet on a U.S. Federal Reserve rate cut later this month. Now, traders are now pricing in a 90% chance that the U.S. Fed will lower rates by a quarter percentage point at the September 17th meeting, driving strong demand for the precious metal. Meanwhile, we also have the Indian benchmark indices post a lackluster performance, and gold and silver have posted a strong rally. Gold prices trade as much as 32% higher, and silver prices are now up about 40% or so just this calendar year 2025 alone. In fact, yesterday's closing on the yellow metal was as high as 1,06,000 rupees for gold in the open market for every 10 grams. Now, the rally in safe haven assets like gold and silver is driven by concerns over uncertainty and financial stability. Remember, gold and silver prices have surged more than 30% this year, cementing their status as the world's most sought-after safe haven asset. The rally comes as geopolitical tensions, currency volatility, and fresh tariff disputes trigger a risk of sentiment among global investors. On international exchanges, gold has risen as much as 32% year to date to trade above, like we told you, the $3,500 per ounce, its highest on record. Silver, meanwhile, has outpaced gold, climbing more than 40% to $40 an ounce, a level that was last seen back in 2011. In India, gold prices have advanced as much as 34%, 2% more than global prices in this calendar year 2025, trading on an average between 1,02,000 and 1,05,000 this year, but crossing that 1,06,000 mark yesterday. We have a very special guest joining us this morning to help us put all this into perspective on what is likely to be the future of gold prices. Kunal Shah from Nirmal Bang, commodities expert, joining us this morning. Kunal, help us understand festive season around the corner. Gold at record high, rising bond yields, crashing stock markets. How high is the precious metal going to go?
See, right now the narrative is that we are heading towards a scenario of economic condition called stagflation, where we are going to see a lower growth and a higher inflation. So I think that is going to be the narrative, at least for some time. And till the time Trump reverses his tariff, I think it is very difficult for inflationary expectation to go down. And hence, gold and silver are responding the way it is responding. So if you look at the bond yields in Europe, in US, everywhere the 30-year bond yields are continuously shooting up. And that is basically sparking the worry that what will happen to overall bond market if this continues.
Right.
So I think the markets are screaming that either Mr. Trump should withdraw from the tariff, otherwise the inflation is going to shoot up. So till the time we see that kind of steps taken by Mr. Trump, I think gold and silver will continue to remain higher, and it will continue to attract the money flow in the system. So I am of the view that gold and silver in near term have given excellent return and will continue to do so in times to come. So
Right.
buy at dips is the strategy. $3,700 is the target for gold, and $45 is the target for silver.
All right, so $37,000 an ounce is the target for gold. Ceteris paribus, you used an economic term, stagflation, I'll use an economic term. Ceteris paribus, no change in tariff, no change in the policy of economic policies of Donald Trump and his administration. What does this 37,500 levels mean for Indian consumers who are heading into the Diwali buying season?
I think it's going to be a very tricky one because on one side the prices are at all-time high, 1,06,000 rupees on MCX plus GST if you add.
Yeah.
So customers are going to find very difficult. But I would recommend that if you want to buy 50 grams, you can buy 25 and wait for a dip. Or if you want to buy 10 gram, you buy 5 gram now. But it's unavoidable because it's a festive season going forward. And looking at the way the uncertainties across the world is going on,
Yeah.
I don't think so that there's going to be a crash in gold prices until there is a solution to the Russia-Ukraine war and ongoing reversal of tariff. These are the two key factors
Right.
which can lead to a sharp correction. Otherwise, gold prices, you are not going to see much correction.
All right. So then an obvious final question to you, and I think I know the answer already, but for clarity for our viewers, those who may not have the money to buy gold at these prices but are holding on to some gold, I'm sure your advice would be hold on to that gold and don't sell it just as yet. Am I right?
Yeah, I mean, there's no reason you should sell it until you need money. Otherwise, you should remain invested because we are in uncharted territory. I have not seen a time we've been in the markets from last 20 years where a bond yield, 30-year bond yield across the world, Europe, UK, US, everywhere 30-year bond yields are shooting up. So
Right.
this is not the time when you get rid of your gold. You don't know if something goes wrong from here, gold is your only hedge.
All right. Gold could be your only hedge if things go wrong. Kunal Shah, Head of Commodities Research at Nirmal Bang. Thank you so much for your time. Pleasure as always having you here with
My
us.
pleasure.